Do you have a small business? Do you have kids? If you do, if you have a small business and you have children, I want you to stop paying taxes on the income that you earn and then giving money to your children or paying for your children's expenses. Instead, I want to talk to you today about a way that you can turn all of your kids' monthly expenses for their daycare, their activities, their clothes, and their going out with their friends and all those things. You can turn all those things into tax deductible expenses. That's going to be the topic of today's video: how to put your children on the payroll. On the other side of the break. Okay, guys, before we dive into the content today, if you haven't already done so, I want to ask you to go ahead and subscribe to our channel. We do post content here on the channel just about every week or so. So go ahead and subscribe. Also hit the like button to let the YouTube algorithm know that you like this type of content, so it will send you more of it. And finally, go ahead and hit that notification bell. Smash that bell, right? So YouTube will let you know each and every time we post a new video to the channel. Okay. All right. So the first thing I want to let you guys know about putting your kids on the payroll is that, look, this is a legitimate thing, right? This is a real business and tax strategy. Okay. It's legitimate if you have children. They have to be your children for this particular strategy. There are other strategies for nieces, nephews, and grandkids, but today we're talking about your own kids. So first, they have to be your kids. Second, and you have to actually have work for them to do. Okay, that's a very important thing. You have to actually have them work in the business in order to be able to pull off the particular strategy that we're going to discuss here today. But if you can do those two things, this is a legitimate strategy that allows you to save up to $12,000 per year in income taxes per child. So if you got 3 kids, you're talking about a $36,000 annual tax deduction by putting your children into the business. Another thing that we want to make sure that we have in place is clear duties, right? You want to be actually paying them, like I said, for doing work in the business. I'm not talking about cleaning their room if you have a home-based business or washing dishes or something like that. I mean actual business related chores and activities, things that you might pay someone else to do if they weren't your own children. Okay, maybe shredding paper or making coffee or running errands or things like that. It really just depends on what your business is. If you have a real estate brokerage, they could be working in your brokerage. You have an insurance agency, they could be working in your agency. If you have a home-based e-commerce business, they can definitely be working around your home office or doing things in the office. But it's got to be business-related activities, not things at home that you would have them do otherwise. Okay, and you probably want to integrate some sort of written what do you call it, like a written job description. Okay, so you want to have an actual job description, like on a real job, that details what they're going to be doing on a day-to-day basis. You want to have it written down. You want to have it published ahead of time so that if the IRS actually does come looking, you have that paperwork in place. So the next thing to consider is that you want to make sure that what you're paying them is something that is appropriate to their age and their level of ability, right? Just because the max you can pay your kid is $12,000 per year doesn't mean you actually want to be paying $12,000 or $1,000 a month to a 5-year-old, right? The IRS is going to come in and look at that, and that's going to raise all types of questions. So you want to be paying them a level of income that is appropriate for their age. Okay, so maybe if you have a 5 or 6 year old, which 6 years old is generally about the age that's the consensus among a lot of accountants and tax attorneys that I've heard from regarding this topic. So let's say you have a 6-year-old, right? You want to pay them a few $100s a month. $200-300 a month is probably going to be in the ballpark of right where you want to be. And then you want to have them doing job tasks around your office that are commensurate for that level of income and for their age and their skill and their ability. All right. Okay, so with those preliminaries out of the way, let's sort of jump in and talk about exactly how this deal plays out. Okay, now we're just going to be going over the highlights here. Okay, this is it can be kind of a cumbersome topic. If you want to discuss more in detail, or you need more of an in-depth analysis, as to how this general overview would apply to your particular tax situation, I want to encourage you to hit the link down below and schedule an appointment with us. It's no cost for a 30-minute session, and we can go over exactly how this relates to you and your specific tax situation. Okay, so this video is really just a what do you call it, like a 10,000 foot highlight or overview of this very powerful tax saving strategy. Okay, so how do you actually do it? So I'm going to break down 3 different scenarios that go over how you actually go about putting this into practice. Okay, so in my first scenario, let's say you are a sole proprietorship. All right, so it's just you're a sole prop. What you're going to do is you're going to pay your kids under $12,000. Let's say a couple of $100 up to about $1,000 a month. You're going to pay them as outside labor. Okay, it's going to pay them as outside labor. You're not going to file a W-2, no 1099. And people always ask, well, why don't I have to file a W-2 or a 1099 if I'm paying them? How can I write it off without doing the W-2? Well, the answer is because they're your own kids, right? In pretty much every state, except for, I think it's Washington State is the only one that's the exception. But in every other state besides Washington State, you don't have to withhold SUTA, FUTA, and FICA for your own kids when you're paying them in your business. You don't have to withhold SUTA, FUTA, and FICA. That means you don't have to do a W-2 or 1099 to them. So then they say, well, won't there be a fine or a penalty if you don't do a W-2? Well, the fine is equal to the amount of the tax liability that the person would have owed if you failed to do the W-2. Let me repeat that. The potential fine is equal to the amount of tax liability that the person would have owed if you had filed the W-2. Well, we just said we're going to pay the child less than the amount of the standard exemption. That means that there will be no tax liability. So as long as you're paying them under $12,000, there's no tax liability. As long as there's no tax liability and you don't have to do withholding, do any withholdings, in other words, no SUTA, FUTA, and FICA, then there's no W-2 or 1099 required. That's what makes this strategy so beautiful. You get to write off the money that you're paying to them, and they don't have any tax liability or even an obligation to file because there's no tax liability. And then they can go off and do some other things that we're going to talk about later on in this video. All right, so that's the first strategy. What if you have a sole proprietorship? Okay, in this next scenario, we're going to talk about what if you have an S Corp. You're not a sole proprietor, right? You have an S corporation. Now, in that case, you are going to have to do a little bit more. There's one additional step, right? You're not gonna pay them personally, because then there would be a tax filing requirement. So you're not gonna do it that way. What you're gonna do instead is you're gonna create another entity, a family management company or something like that, whatever you want to call it. It doesn't particularly matter. You're going to have them set up their own sole proprietorship, and you're going to pay that sole proprietorship. And they'll have their own bank account. Each child should have their own bank account, and you're going to pay their sole proprietorship the money that you would have paid to them, and have that sole proprietorship pay the child, right? So for example, you have an S corp. It's I don't know, Mom and Dad Incorporated, right? So Mom and Dad Incorporated is going to pay your child. So it's going to be child business Child Business Inc. or whatever the case may be. It wouldn't be Inc. because they're a sole prop. But Mom and Dad are going to pay the child's business, and then that business is going to give the money to the child. Now, it might sound cumbersome, but all of this can be done in modern times instantly with things like Cash App, Zelle, if you have like Bank of America or something like that. It can all be done instantly with online transfers. So let's say your kid comes to you and they say, Mom, Dad, I need $200 for a school trip or for some expenses or whatnot, after school activities, sports, or whatever. Then instead of just pulling out the money out of your pocket and giving it to them, you pay it from your S corporation to their sole proprietorship. And it can be done immediately through an online transfer. And then their sole proprietorship would just put the money onto their debit or credit card. So boom, you've taken what would have otherwise been a non-deductible, a non-tax deductible expense like a school trip or something for your kid, and turned it into a totally deductible expense that your S corporation business can now write off. Okay, so now you've got your kids on payroll, right? When you're ready to start mastering this technique, the next question is, can my child rather now set up a retirement plan, an IRA or whatnot, to start saving for their retirement? Now things start to really get interesting, right? Because you've now taken money that you would have otherwise just been giving them after having already paid taxes, and you've turned it into a tax deductible expense for your business. So you've paid them money that way. Then they then go about setting up a Roth IRA, right? So let's say they go out and set up a Roth IRA and put the money into the Roth because now they have earned income, right? So now they're saving money at a young age for retirement and getting the benefit of compounding interest. You're teaching them about savings, and you take it to a whole nother level when you decide that that IRA will be a self-directed IRA. So what's the benefit of doing it that way? Now they're able to invest as partners with mom and dad in the next real estate rental property, the next flip, stock investments, invest in businesses, invest right alongside mom and dad as partners in the business. So boom. So now you've taken what would have otherwise have been just an expense and now turned it into a wealth generating cyclical type of machine, if you will, that's going to generate wealth on and on and on and on. All right. But anyway, guys, like I said, this was just a general overview of this particular strategy of putting your kids on the payroll. Okay. There's a lot of other things we can talk about. Once your kids on the payroll, we can talk about things like medical insurance and, claiming all kinds of other deductions that are normally reserved for employees, but now that your kids are employees, we can take advantage of some of those things. So we can talk about those things and how they play out for your specific situation rather than this general business overview that we have here. Again, if you want to talk about how this would play out for you specifically, I would encourage you to click the button down below and schedule your free 30-minute tax strategy session where we'll look at your returns and go over exactly how this thing plays out for you. All right. Other than that, please also go ahead and follow us on Facebook, Instagram. Where's that? Like us on Facebook and follow us on Instagram. We do put out content there as well. And again, I'm going to ask you, if you haven't already done so, please subscribe to our channel and hit that like button and that notification bell so YouTube will let you know each and every time we put out a new video. All right, guys. Well, that's it for this week. I'm Corey Hankerson with Legacy Tax and Financial Planning, and I'll talk to you later. Bye-bye.